Hi there, ladies and gents. Welcome to Livewire's C-Suite reporting season coverage. My name's James Marley. I'm a co-founder of Livewire Markets, and today I'm speaking with Joy Linton, the CFO of global biotechnology business CSL, to learn about the company's latest results and outlook. Now, many Livewire readers have been strong followers and loyal followers of CSL. So, Joy, I'm really pleased and appreciative of your time today, and welcome to the call.
Thank you very much, James. Delighted to be here.
To kick things off, what are the key figures from the result that you think investors should be aware of?
I think we've really been able to deliver what we said we would do, which was to deliver double-digit earnings growth. And I think we've demonstrated that. We talked at our Capital Markets Day last October about being able to deliver consistent, profitable growth, and FY24 was our next step in that journey.
And Joy, CSL announced the final dividend of US $1.45 per share, which took the full year dividend to $3.81. And it's a payout ratio of about 46%, which is very much in line with the long-term average for CSL. Are there any other plans over FY25 to return further capital to shareholders, or are you focused on investing for growth?
Our dividend policy has been quite consistent for quite some time, and you will see our dividend increase as our earnings increase. We are a growth company, which means we're looking to drive future growth for meeting really the unmet need that we see for our many products that we have around the world to meet the needs of patients, and how that returns back to shareholders will be partly in the form of dividend, which should increase in line with our earnings growth, but then also as the share price should go up over time as we keep driving growth and reinvesting in the business.
Okay, let's dive into the operation environment. There was a lot of focus on margins in your Behring business. What levers do you have to pull to improve performance across that division?
Yeah, so CSL Behring is the largest part of CSL. It's about 70% of the group, and it's where we really make a whole lot of largely plasma-derived therapies for people with rare and serious diseases. And that business probably had, of all of the parts of CSL, the largest shock through COVID. And it's taken quite some time to return that business to the sort of growth that we're starting to see in the year that's just gone. And as a result of the shocks of COVID, we had a margin contraction. And again, in the year that's just gone, you've just started to see that margin turn up. And we've made some forward statements around continuing to drive that improvement in margin. And again, in the year that's just gone, we've started to put a number of those building blocks in place that should start to see us improve the gross margin for CSL Behring over time.
Specifically, what are some of those building blocks?
Yeah, sure. So bringing down the cost per litre to collect plasma is a fundamental part of that. And some of that is reflected in the donor fee. Some of that's around the centre efficiencies. We have a number of programs to drive additional efficiencies, really driven by innovation. We're in the middle of implementing a new plasmapheresis system, which is what we call the RECA system, in partnership with Terumo Technologies. And we've about 100 centres that we have rolled out, and we have over 300 centres. So that's a program in place. And that will really help us further reduce the cost to collect plasma. There are other opportunities, though. We're creating additional yield initiatives in our manufacturing network. We have invested quite heavily in the manufacturing network and starting to see some of those benefits come through. And then as volume builds back in a more normalised way post-COVID, we should start to see some mix improvements as well.
In the result, the company also talked about increased competition for your Vifor business. How will CSL build a competitive advantage in this business? And could you give us a sense of your future plans there?
Yeah, sure. So in 2021, we acquired Vifor Pharma, which is the world's largest producer of iron and high-dose intravenous iron products. And again, this is a market that we see has a significant unmet need for patients. There are many people who have anemia that are undiagnosed. And so we're looking to take the strength and breadth of CSL and see some expansion of their iron products. In the short term, however, there has been additional competition, which is some follow-on competitors have come into Europe. It happened a little quicker than we were expecting. And so far we've seen a modest price reduction in those markets, but still seeing this sort of mid-high single-digit volume growth. And we've still got to get through a loss of exclusivity event in the US in mid-2026. But once we get through that, we would expect to then continue to be able to drive volume growth. And then the other part of the Vifor business is actually the nephrology franchise, which again is a much faster growing, a smaller but faster growing part of that franchise.
Okay, so a relatively recent acquisition, but long term, you still feel confident with the acquisition there?
Yeah, absolutely. We bought it for the long term, and on a 10-year view, we still see that business delivering good returns to shareholders. Clearly, in the shorter term, it's a bit more challenged, and the revenue and earnings are likely to be kind of more subdued. But in the short term, CSL Behring is going to be the powerhouse that continues to drive the double-digit earnings growth for CSL.
I need to brush up on my Vifor pronunciation, by the way. I just wanted to touch on vaccines. Sentiment towards vaccines have changed significantly since 2020. Just wanted to get a feeling for what your internal projections are with regards to demand for vaccine products.
Yeah, so CSL Seqirus is our vaccines division, and through COVID really performed amazingly strongly and protected actually a lot of the earnings of CSL through that period. What we're seeing now, though, is that there is quite a degree of vaccine fatigue, and there is a reduction in the market, particularly in the Northern Hemisphere and in the US. We've performed quite well, and so for the year that's just gone, our revenue for CSL Seqirus was up 4% in a declining market, and that, I think, is really testament to the differentiated portfolio that we have. We haven't chased the low-priced egg-based vaccines. We haven't chased that price down because we think that takes value out of the category. And so we'll continue to perform well, we hope, but the market in the short term is quite challenged. We have seen this in prior pandemics where you do get a reduction in immunisation rates after like a MERS or a SARS pandemic, but clearly COVID-19 was a significantly bigger scale event. And so it'll be interesting to see how long it takes for the market to start growing again.
And do you have a view on what contribution that division will make to the revenue mix across your divisions in the years ahead?
Yeah, well, as I said, I think in the forward year, we would look for it to be largely flattish, which will be a good performance if the market continues to decline. We think we have a really good portfolio of products and products that will serve us well and will be well positioned for when the market starts to grow again.
Okay, I'm going to jump into the outlook. You kind of jumped my question a little bit earlier, but CSL provided guidance of 5 to 7% growth for FY25. You've alluded to the fact that most of that growth is going to come from Behring. Is that right?
Yeah, so we provided two lots of guidance, one on revenue, which was 5 to 7% revenue growth. That will be largely driven by CSL Behring, with both Seqirus and Vifor more flattish. We also provided profit guidance where we said our NPATA would be between 10 and 13%, which is consistent with our statements of double-digit earnings growth. And so what you can see there is, again, improving margin in CSL Behring and some additional leverage that we're getting down the P&L as the business grows. We're deleveraging, so there's some reduction in interest costs as well. And we're well positioned for another strong year.
What do you think are some of the upside and downside risks to the forecast?
Yeah, that's a good question. Clearly, the discussion we've just been having about the Seqirus Northern Hemisphere season is definitely one of them. Another would be how well the generic competitors in Europe with the iron franchise, how they do perform to date. Their performance has been subdued, and so it'll be interesting to see how that plays. And then in CSL Behring, I think it'll be how well some of our new products perform. So We have, as you may have known, launched recently the world's first gene therapy for haemophilia B patients. The take-up of that in the last year has been a bit slower than we would like, as we really are at the vanguard of changing. It's just a brand new therapy. It's a cure for people, which is amazing. So we'd like to see that take off this year. And then in another category that we're very strong in, which is HAE, or hereditary angioedema, where we already have great products. We have a new product coming to market towards the end of this year, or this financial year, called garadacimab is its medical name. And the data on that is amazing. And so we're hoping that will be the new standard of care. We have new product presentations for Hizentra, which is our subcutaneous immunoglobulins product. So we've got some really interesting innovations coming to market, and how they take off, I think, will be interesting to see.
Okay. One final question, if I may. In your role as CFO, one of your responsibilities or roles is to identify opportunities for operational efficiencies within the business. It's been a big theme across the market over the past few years. How much room do you see for improvement at CSL on this front?
Yeah, well, in the last year, we delivered 100 million of synergies integrating CSL Vifor, and we'd said to the market we'd do 75 million over 3 years, and we delivered 100 million over 2 years. But there is more to go. I think that's always, you always want to be trying to doing things more efficiently, using innovation, being more productive. And the larger CSL gets, there is more opportunities to actually do something once, do it efficiently, standardized procedures, and that's very much a focus and a journey for us. And shareholders should see the benefit of that through some leverage in the P&L going forward. I think our G&A, or our general and admin costs, which is our kind of overall administration costs, were down in the prior year to about a bit over 5% of revenue, and we'd look for them to be in that order of 5 to 6%. And we'll continue to mine opportunities driven by digital AI. Doing something once rather than doing it 3 times is a rich source still of lots of opportunity to go.
Gosh, you reminded me, I probably should have slipped an AI question in there. Joy, thank you very much for taking the time to speak with Livewire as part of our C-suite coverage this reporting season, and appreciate your time today.
Thank you very much, James.